Hi everyone, this is Nicole Aliev with Caris Realty. My guest today is Brian Lanning, and Brian is a mortgage banker at Severn Bank here in Frederick. And I thought it would be great to speak to somebody who works with a bank as a mortgage broker and works very much locally, because I think they're very different offerings that can be made when you go to a bank sometimes versus going to other lenders. So Brian, welcome.
Hey, Nicole, thanks for having me. Appreciate it.
So Brian, tell me a little bit about you and Severn Bank. How long have you been with Severn Bank?
So I have been with Severn Bank for about 2.5 years now. I've been in the industry for 5.5 years. Prior to that, I was selling insurance. I guess in total, I've probably been doing housing for about 7 years or so.
Oh, wow.
But
yeah.
So this is the third bank I've been with, and I finally feel like I've found a home. It's nice having a local backing. Our headquarters is in Annapolis. Our branch is in Frederick, and it's just nice having that local feel. We have, not only a mortgage division, but we actually have brick and mortar checking and savings banks in the Annapolis area as well.
So tell me, what makes you Severn Bank unique as a mortgage lender and local bank?
A lot of people kind of get thrown off by broker or banker or loan officer, and there's different caveats to each. I think that with the bank that I work at, we kind of have the best of everything. So like I said, we have local checking and savings. So we have the at-home feel. They're going to try to start building more up towards our area, but for now, it's just really Anne Arundel County. We have direct access to our underwriters that are local. We have community partners programs, so we're very involved in the community, where a lot of brokers might not be such involved in their local, climate, more on a when you think of broker, you think bigger scale, you think might not even be in your state where the people are underwriting your loans.
Right.
We have all of the product offerings in terms of grant programs, the Maryland Mortgage Program. And on top of that, just being a local guy growing up in Frederick, knowing the area very well, I have that backing as well, just, being involved in the community. And I think that's what kind of sets us apart.
Right. So really, as a local, knowing your community really well, and your investors, are they also local too? So
Severn Bank, we actually service our own loans, at least on the conventional side. So a big portion of our book of business is serviced by Severn Bank, which is nice because really, if you had an issue, you could drive down to Annapolis and talk it out. As far as investors go, there are some bigger time investors in the government sector, VA, FHA, USDA, and we just sell directly to them. So we underwrite it in-house, we do everything up front, and then once the loan is sold, send it off to whatever investor that is.
Right. Huh.
Instead of actually underwriting it at the investor level. So everything happens in-house, whereas a broker will actually ship everything out to get it underwritten, processed, and then sold. So there's a lot more continuity, I would guess you could say, between myself and the underwriter, especially in a case where, if there's a little more difficult types of employment, especially with your self-employed borrowers, I can really talk it through with my underwriter and figure out ways to get things done. On top of that, we actually have a very large portfolio division where we deal with a lot of your self-employed borrowers that have different avenues to purchase a home that might not be in a traditional, mortgage way. So it gives us a leg up, so to speak, in terms of that and being able to get things done for people.
That's super. And tell me, do you offer special programs for first responders?
Yeah, actually, we offer more than just for first responders. So it's educators, first responders, people in the healthcare field, firefighters, police officers, veterans. Am I forgetting anyone? I don't think so. But there's plenty of community money available for those types of professions. So it's nice to be able to give back to that people who really run, our area and are, putting themselves on the line for us. One of the ways we can give back, especially nowadays, for sure.
Right. So let me talk to you about what's happening nowadays, because the Dow is down again today. I hear it's down 1,400. Well, that was the last time I checked on the radio. Does that affect you at all? That's always a question that comes through to us.
Yeah, so a lot of people get it kind of misconstrued a little bit. The Dow dropping is a good thing for mortgage rates, tentatively. It helps because a lot of people start dumping money into the bond, but that's not always a direct reflection of what the actual interest rates are. So when the Feds came out and said they dropped the rate to 0, everyone thought they were getting a house for free. That's not the case. Typically speaking, though, in a good way to look at it is usually when the Dow is a little bit lower or has a big hit, usually mortgage rates are a little bit better just because people start dumping their money into the bond. Right now, we're seeing all-time lows in rates, and I don't think they're going to get really any lower. I don't think they could afford to get any lower, to be completely honest. I don't think the banks will be making enough money, quote unquote. But we're in a unique time where they've never been this low before, and it's such a wonderful time to buy, especially in a time where a lot of people might be a little scared to go out and look at homes. You might have a leg up, in trying to purchase your house, especially with a very, very strong interest rate.
So give me an idea of where they're at today.
So right now,
conventional, a VA, and FHA.
So your government loans, FHA, VA, USDA, they're all in the mid to high 2s, and then your conventional rates are in the high 2 to low 3. So it really just depends on your credit score, your overall profile, how much money you're putting down, things of that nature. But mid to low 3s, I mean, you can't really beat that.
You can't. So tell me, are you seeing any trends in the industry at the moment?
Well, the big trend was they got rid of a lot of what's called your non-QM products. So a lot of these weird one-off bank statement programs, some weird type grant programs they have nationally, your day out of bankruptcy programs, things that are a little bit on the outskirts, not your straight up just regular mortgages. Those all went away.
Okay. Shortly
after that, that was right when COVID hit. Well, shortly after COVID hit, and we all went home, basically. And then shortly after that, they dropped all the jumbo programs. So your biggest investors for jumbos are your Wells Fargo and SunTrust, and they're just like, nope, not doing them right now. Mm-hmm. With that being said, there was also some of the renovation programs and things like that that all kind of dropped off. They're starting to trickle back in a little bit. They're starting to get an appetite for it again. In uncertain times and certain water, especially with the jumbo stuff, a lot of the people that are buying really, really big, houses and homes are usually your self-employed borrowers. I mean, let's face it, you're buying $1 million or $2 million house. Usually it's because you've acquired wealth. You're usually working for yourself, typically speaking. So that's a risk that most banks weren't willing to take on, because how are they going to make their payments if the business goes under? So I think they've loosened up a little bit. I think that stuff's starting to come back. One other thing they did is they rose interest rates a little, or not interest rates, credit scores. So it really became a thing where anything less than 640, no go, when it used to be a lot more lenient.
Okay, good to know. So 640 is the base.
Yeah, we're starting to see 620 now. There's some investors really kind of getting back in the game at 620. Ultimately, and this is what I kind of preach, is, your interest rate's a direct reflection of your credit score. If you're buying a house at 620, unless it's a dire need, like you have to get out of your house, move right now, let's take a look. Let's figure out how to get your credit scores up so you can maximize, paying interest over the course of a loan really adds up, so you might as well try to get the lowest interest rate possible.
Right. And that's something that I think a lot of new buyers don't realize. When they start looking for a house, maybe some of them know that perhaps they should be speaking to a mortgage broker first, but they're also not aware that, one of the things that you do, in a way, it's like free credit counseling, because it works in both of your interests to manage what's going on with credit and to build you up to a certain point where you can get a better interest rate and be offered different products.
Well, yeah, for instance, 9 times out of 10, they're going to the realtor first. And that's just the way the world works. Not a big deal. However, a lot of times, if you just go to a mortgage, lender first and talk and get your credit pulled, there might be something on your credit you don't even realize. You might have had 740 credit score your whole life, and all of a sudden you had a collection or something random on your report that wasn't even you, and it dropped your score down to 620 on just that. Right. And that's an easy fix. You can get that disputed, get your scores back up. But if you're waiting to the last minute to put an offer, like if you want to pull your credit today and put an offer on a house, what if your credit score is not exactly where you need it to be? Or there's something that pops up on there that we can fix in a reasonable amount of time, but it could prevent you from getting that house right now. So I think a lot of it is just being proactive, especially in the market now where, let's face it, there's not a lot of houses for sale. And I know they're coming. They have to be coming at some point. So, over the next 2-3 months, I think we're going to see a spike in inventory. So you want to get all your ducks in a row because you don't want to miss out on that house.
Right.
So I think that's what a lot of people kind of forget, is that that's such a big, important part of it. It's fun going to see the house. I know my part of it's not the most enjoyable, providing documents, getting your credit pulled and all that, but it's necessary to go see the houses. And especially now, more so than ever, especially once COVID first started, really changing the way we had to do things, you couldn't even go see a house without a pre-approval letter. It used to be kind of more lenient. They used to be able to let you in, but now it's, nope, you're not getting in unless a lender has pre-approved you. We have a letter just to even view the house, not even to make an offer, just to view it. So, and a lot of people operate that way, but not everyone. Sometimes they'll take a client out, they want to see it, but now it's a must to have that letter first. So it's kind of changed, I think, for the better, because ultimately you want to know what you're approved for and what the payment's going to be on that house before you even step foot in it.
Plus, you don't want to put, yourself or the homeowner or your clients at risk when they can't afford and they don't know really how much they can afford to buy. And that's the whole point of going to the mortgage broker, because they're telling you, this is how much you can go to. And this is what, approximately your closing would be on this particular kind of property or a property at this level. So for me, it's always a tight working relationship working with the mortgage lender, because, I want to make sure that I'm not wasting mine or anyone else's time and or putting their health in jeopardy.
Right. And a lot of people know if they're approved. I mean, your credit score is good. You have money. But what I don't like to do is get people pre-approved at the top of their budget. They start going to see houses in there, and then they realize those payments aren't what they want. So having that discussion first, let's start looking at houses that are within your budget monthly. And if you don't like those and you're able to go higher, then you start looking up. It's much easier to go up than it is to go down.
Absolutely. Now, Brian, one of the things that you offer is this bridge loan. And I don't think many people really understand what a bridge loan is and how it can help them when they're buying a home. Talk me through your bridge loan offering.
So I'll make it as simple as I can, because it's a little more convoluted than this, but we have a very good process. And this is one of the things that Severn Bank does that really no one else does. This is part of our portfolio program. So it allows us to basically take collateral from the house you currently own, use that equity, and place it onto the next house in terms of a down payment. So you don't have to come up with the money right now. We're just basically retaining rights to the house till you sell it. We're going to put you on a principal or an interest only payment. So you're basically carrying really not two mortgages, but it kind of is. You're paying interest only on it. Once you sell your house, you'll get all the funds from the sale of the house because we just paid that off for you. And then you'll refinance once you're done selling. Once you have all the equity, you can knock down your principal, get into a traditional 30-year loan. But essentially, in short, what it allows you to do, it allows you to go non-contingent on your next house. You don't have to pull any money out of pocket. You can finance the closing costs. You can finance the whole down payment. And you don't have to worry about people coming in your house where you're trying to sell or trying to buy, rather, and have that pressure of selling and buying all at the same time. So that's really the biggest benefit is if your house isn't really ready to be shown, and if you move everything out of it and get it fixed up a little bit, it's going to sell for more. Those are really, really good opportunities to really increase what your house is worth.
And can you use part of that loan to help fix up your house in order to sell it?
Exactly. So it comes down to a total loan to value between the two houses. So we're going to get an appraisal on both houses. But as long as it fits in with, the total loan to value, you can actually take some money and fix up your current house and get it ready. In some cases, paint and flooring goes a long ways to sell a house, and you can do that all and not have to, pull that money out of pocket. So it's very, very unique.
That's excellent. So tell me, different situations where that can be used. So, one I can think of, if you're an empty nester and you want to move out of your home and there's a lot of clutter to get rid of. And so you're working two places, it allows you to fix up one, move into the other, etc. What would happen in the case of a divorce? So say a divorce is going through, could somebody base the loan on the equity that they're due to get out from, while the divorce is going through? Because sometimes what happens is, you find two partners, once they're splitting, they're buying new homes. Can the bridge loan be used for somebody in that kind of situation?
Yeah, as long as the agreement, the divorce agreement states XYZ, that's going to be the biggest component to when you have two people who are due equity on a house. That's where it gets a little, not confusing, but yeah. So you just have to have the appropriate documentation, make sure that you're going through all those channels before you really try to, take on the next house, because ultimately you're going to want to know that information anyways. You don't want to get into a situation where you're trying to buy a house, you're thinking getting this equity, you go back to the court and then you're not guaranteed that money because of XYZ, the way your divorce turned out. So as long as it's documented properly, there's actually a divorce agreement. Usually, especially in a situation like that, you could probably get away with the separation agreement, but you want to make sure there's something in place, because that could ultimately hurt you in the long run if you didn't.
Super. So tell me, what sector of the market are you currently seeing the most growth in?
I think first-time home buyer, first-time home buyer, I think.
First-time home buyer.
Yeah, it's gotten to the point where there's a lot of grant programs available. I think, at least my generation, so to speak, we were kind of hit hard with the student loans, but I think a lot of us are kind of getting past that now and getting into our second, third jobs, making more money. So I'm really seeing a big influx in first-time home buyers. And then on the opposite end of that, the baby boomers are starting to sell. I think a lot of them are getting out, going to more of a retirement type community. So that's going to be
the silver sales, yeah.
Yeah, so that's really the next big wave, and that's where a lot of the inventory is going to come. I think in the next 3 years, I think is what they project. So I think that's going to be, people selling and buying, or selling and moving into retirement, whatever they're doing. I think that's going to be the biggest.
And the Maryland Mortgage Program, which covers some college costs, so any remaining balance on your student loan, is that still operational at the moment? Because I know that there was some discussion about that about a month or so ago.
I haven't seen them take it away. It's a very unique program, and I don't know that I agree with it.
Okay.
I myself have student loans, and I've tried XYZ way to get, lower interest rates and things like that. And don't get me wrong, you can do it through the Maryland Mortgage Program. However, the max amount of student loan debt you can have is $40,000. Majority of America has more than $40,000 in student loan debt. So if you're over, let's say you're at 45, you would have to bring $5,000 closing just to pay off and get your loans down to 40,000. And then you go from a situation where you're taking your student loans and wrapping them into your mortgage, which is nice because it's a low interest rate. But interest rates on some student loans are only 4 or 5%. And then you're extending it out to a 30-year note versus a 10 or 20 is what you had on your student loan. So I think there's a time and place for it all, but I haven't seen one that's worked, at least when I look at it. You know what I mean? I can think of a lot of different ways you can go about it, and I just don't necessarily agree with it. And maybe other people are doing it, and that's for them. I just, being as someone who has taken on an absorbent amount of student loan debt, I don't necessarily agree with extending it out to 30 years,
Yeah.
So, and then you run the risk of, then you have a loan that's possibly really more than what your house is worth. So you're under, and you have negative.
You're underwater already from the beginning.
Yeah, and so it's interesting. And that's kind of my 2 cents on it, for sure.
Awesome. So lastly, any advice to people who may be struggling with their mortgages right now?
It's
because I think forbearance was held out and a lot of people are like, oh, you know, this would be a wonderful thing for me, but it isn't, is it?
Yeah, I mean, we don't know the ramifications of it yet. When it first came out, it seems great. Oh, we're going to put more mortgage payments on hold, but what are the ramifications of what are investors going to see down the road if you have to, sell and buy your house? Is that going to be considered like missed payments? I mean, technically it is. Are they going to tack on a bunch of principal onto the end of your loan? Is there going to be any type of balloon payment? I mean, there's so many questions that need to be asked if you go through with that. It sounds terrible, but I'd make my mortgage payment over my car payment. That's it. If that's what you're really coming down to, if that's like the end all, you could always fix your credit in the long run, get back in a situation and get a car. There's public transportation. I know that this is like, we're talking very, very like end of the road type scenarios, but don't miss your mortgage payment because you don't know how that's going to impact you in the future. What if they say all these people that were in forbearance, now they can't buy for 3-4 years? What if they're right at the point of selling their house? Now there's this balloon payment possibly. There's so many things that aren't really discussed unless you really, really dig into all the facts. And unfortunately, I don't really know the answer to what the forbearance looks like because I didn't have to go through that process and really make those calls and figure out what are the ramifications of me doing this. And every investor is going to have a different thing that they say. So whoever your servicer is that you're paying, it's a case by case scenario. So, we don't really know the impacts of that yet. All I know is that when you don't make mortgage payments, it destroys your credit and also potentially
it hits your credit from the first missed payment. Yeah. Regardless of what they're offering.
I mean, even one missed payment, just in general, you can't buy a house for 12 months or refinance. Right. You can have one missed payment in the last 12 months, but not in the past 6. So you might as well just call it 7 months to a year that you can't buy a house for missing one mortgage payment.
That's awesome knowledge. Thank you. Brian, thank you very, very much. I appreciate your time today. Do you want to give your number in case anyone wants to reach out?
Yeah, I mean, you can contact me directly at 240-405-0859. You can text it, call me. My email's pretty simple. It's blanning, LANNING, @severnbank.com. I work a lot of hours. I enjoy talking to people. I enjoy helping people, either save money on a refinance, especially in these times, but even more so, just helping people purchase. I'm very thorough. I like people to know what they're going into, when they put an offer on a house, what to expect. It's very rewarding.
Awesome. Brian, thank you. And everyone, this is Nicole Aliev, Caris Realty. You can contact me 301-305-5169. I'd love to work with you. I'd love to be able to pass you on and share you with Brian and, help guide you through the process of buying your house. So thanks everyone for watching, and Brian, thanks for participating today.
Thanks for having me.
Bye.